Happy Monday, everybody. I hope you had a great Thanksgiving surrounded by family and friends. Today is December 1st, 2025, and this is your Monday Market Update. Let's recap the holiday shortened week and let's look ahead to what is on deck as we enter the final month of the year. Last week was a season of gratitude and gains for investors. Despite the holiday break, markets found plenty of reasons to rally. After a rocky start to the month, Wall Street turned things around significantly, shaking off volatility and posting a 4-day winning streak. The drivers, a reinvigorated AI trade, a resilient consumer, and growing confidence that the Fed will cut rates again in December. Let's walk through it day by day. Monday started the holiday week with a bang. Stocks surged as Alphabet reignited the AI trade by unveiling its upgraded Gemini 3 model. The news set Alphabet shares up over 6%, lifting the broader tech sector as well. Investors also cheered comments from Treasury Secretary Scott Bessent, who noted a very good chance that a new Fed chair nominee would be announced before Christmas. With AI optimism back in the driver's seat and yields fading, the S&P 500 posted its best day since August. The Dow was up nearly half of 1%, S&P up over 1.5%, and the Nasdaq surged over 2.5%. Tuesday saw the rally broaden out. The Magnificent Seven took a breather, but the rest of the market picked up the slack. Cyclicals like retailers and home builders outperformed, driven by hopes for lower interest rates. Markets are now pricing in about an 85% chance of a rate cut in December, up significantly from just a week ago. We also saw 34 stocks in the S&P 500 hit new 52-week highs. That includes General Motors, Ralph Lauren, signaling that the rally isn't just about tech anymore. The Dow was up almost 1.5%, S&P up almost 1%, the Nasdaq was up. Wednesday kept the momentum going ahead of the holiday. The data was the story here. The jobless claims fell to 216,000, defying expectations for a rise and signaling that the labor market remains tight. Meanwhile, durable goods orders rose slightly, supporting the soft landing narrative. Tech stocks rebounded again, led by Oracle, which jumped 4% after Deutsche Bank called a recent pullback an attractive entry point. Volume was light as traders headed for the exits, but the trend remained undeniably positive. The Dow was up 2/3 of 1%, S&P up 2/3 of 1%, and the Nasdaq was up over 3/4 of 1%. Thursday, of course, the markets were closed for Thanksgiving, but the consumers certainly weren't closed. Adobe Analytics reports that shoppers spent a record $6.5 billion online on Thanksgiving Day alone, up 5.5% year over year. Friday wrapped up the week with a shortened session and more records. Shoppers continue to spend, with Black Friday online sales projected to hit over $11.5 billion, while tech saw some profit taking, specifically Nvidia, which slipped nearly 2%. On the broader market held its ground. The Dow was up roughly 2/3 of 1%, S&P up 1/2 of 1%, the Nasdaq was up 2/3 of 1%. As we closed out November for the month, the Dow made it positive by 1/3 of 1%, the seventh straight winning month for the blue chip index, a streak we have not seen since 2018. The S&P 500 was up just 1/10 of 1% for the month, and the Nasdaq was down almost 2% for the month. It was the best week for major indices since June, though. For the week, the Dow was up 3.25%, S&P up 3.5%, and the Nasdaq was up almost 5%. Takeaway from last week, resilience. We saw resilience in the consumer, who's still spending despite inflation fears. We saw resilience in tech, which bounced back aggressively after a mid-month wobble. We saw resilience in the market breadth, with cyclicals and small caps joining the party. This week brings us into the final stretch for the year. We will turn the page to December. Here is what we're watching. Cyber Monday in the consumer, of course. We expect final numbers on Cyber Monday sales later today, projected to reach $78 billion for the entire Cyber Week period. The continued strength here reinforces that soft landing view. On the eco data front, something we've just started to get again since the shutdown. The economic calendar is busy, but with a caveat: because of the government shutdown, the official November jobs report has been delayed until mid-December. That means that all eyes are going to be on the ADP private payrolls report on Wednesday to gauge labor market health. We're also going to get ISM manufacturing today and ISM services on Wednesday. We're also set to see the other jobs data, the Fed's favorite, the PCE, and also the University of Michigan data on inflation expectations and consumer sentiment. The Fed just entered the blackout period, so we'll see a little less talk and a little more action, possibly. I'll admit I can't figure it out, but some of my work shows that we do have some Fed speak this week. Actually, the Fed's very own website says that Fed Chair Jerome Powell speaks today. Markets will be hanging on every word for clues about the December 10th meeting. The site also says that we will hear from Fed Chair for Supervision Bowman twice this week. Again, not sure how or why, but it will likely be newsworthy. Currently, the market is betting heavily on a rate cut, so any hawkish surprise from Powell or Bowman could spark volatility. We have a few final heavy hitting earnings reports this week. Tomorrow, we're going to get cybersecurity giant CrowdStrike and chipmaker Marvell. Wednesday, we'll see tech bellwether Salesforce and retailer Dollar Tree. And Thursday, Kroger and Hewlett Packard Enterprises. As we enter December, we're moving into a historically strong period for stocks, often called the Santa Claus rally. But remember, volume can get thin and headlines can get exaggerated. So with the government shutdown delaying key data, the market is flying partially blind regarding the official jobs picture. That means sticking to your long-term plan is more important than ever. Don't get caught up in the daily noise of a headline-driven market. As always, if you have questions about how these moves impact your portfolio, please give the office a call. Have a great week. Keep planning and stay in touch.